Um, I want to talk about SPX and I want to talk about Apple. So let's talk about SPX, why this is going to be important, obviously, for our Apple trade. Then we'll blend into Apple, talk about that. And if we have time, we'll maybe look at for a setup into the close. I was trying to look for one earlier today, and I just was not finding anything that I really liked. And a part of it is because we are starting to pull back. And so in this market currently on pullbacks, I don't really want to trade them. I rather wait for support to hold and then use that as the buy, the dip opportunity, right? That's just how this year it's been working a bit better than trying to do the hedges. So that's probably how we'll play it for the challenge. But let's talk about what we need to see here. So apologize about that, but appreciate you guys letting me know. So with SPX, this is the intraday charts that I typically like to watch, the setup in the grid format. And on particular, let's focus on the hourly chart. I'll actually maximize this. So the hourly chart, here's today's trading day. It started with this nice bullish divergent bar, right? We were trying to hold support. Everything was looking pretty good. We were basically trying to hold 46.65 to 46.70. We did dip a little bit below it earlier this morning, but for the most part, we bounced back up. The unfortunate side of this is that resistance with the moving averages did end up winning the battle, right? Between support and resistance, resistance won. So we ended up consolidating a bit longer. And then after this third hourly bar for today, the day, right? That's when we started to break support and we started to go to the downside. Momentum at that time was already weakening. So that was a clue that this could start to turn bearish, especially once we started to break support. And then of course, right, if you're in that hourly squeeze, you might have ended up then trading that to the downside. The good news is even though we've sold off today, one, keep in mind, sell-offs in a bullish market are a healthy thing to see, right? We can't have things just go straight up because it almost makes it impossible to buy. We know that at some point there's going to be profit taking and a sell-off. So having these ebbs and flows is healthy for a market, and it's healthy for us as traders because it gives us the buy-in opportunities to jump back in. So getting a pullback, right, and we'll talk about this on the daily chart in a second, totally makes sense to see here. The real key for me is, one, it held quite nicely the intraday support of the 100-period simple on the hourly chart. But now what I need to see into the close is, can it hold daily support? Can it hang out around the 10-period simple on the daily chart? Or are we going to give it up a bit more tomorrow, right? Or certainly into the close. So that is kind of the question for me right now. And it's going to kind of help determine how I might trade the rest of the week or certainly going into the next week. So what were a few clues that we could first get a pullback in this market? Well, we had some top hats printing. I believe we talked about this on Saturday. Correct me if I'm wrong, but we have some top hats printing. I know for my simpler trading folks, we've talked about that more recently. We started to see a little bit of a pullback yesterday. That might have just been our only pullback. We've seen in this market where we've had one down day, like back here, and it immediately got erased. But instead today, we came a little bit closer into support. And now you can see the 10-period simple moving average is at 46.51, right by that 46.50 psychological level. We're getting literally a bounce close into the close. The question or not is, are we going to give it up? The 5 and 10-minute chart to me do not look strong, right? That's almost giving me a hint that if we can't hold here, we could very well go back down to 46.30. If not, maybe make a new low for the day going into the close. If that happens, then that means we're not holding the 10-period simple on the daily chart. And more than likely that means tomorrow or maybe, later in the week, we'll probably go down to test the ATR trailing stop, right? Which is not only a nice technical support level, but it is also a psychological level at 4,600. Now, to me, that seems like a pretty good level to hold for the market. And the reason why is I'm still overall bullish on this. The bigger picture point of view on the weekly chart is still very much a bullish trend, right? And with the reset that we had recently, we actually have a lot of room on momentum to try and continue the long-term trend up. We also have this great squeeze setting up, which, I'd definitely be playing it to the upside. So this pullback almost, right, makes for a buy back in opportunity for us. The question is, where is the buy going to take place, right? Is it here at the 10-period simple, which outside of this year, typically for SPX, the 10-period simple is usually the main simple moving average that is respected on the daily chart in an overall bullish trend. That's usually the level we go back down to. It holds, you buy in, you play the bounce back up, right? This year, we've seen a lot more pullbacks into the 30 and into the ATR trailing stop before actually getting that bounce. So that's why I don't immediately want to jump in here. That's part of the reason. Another reason is momentum is high. So we had started to adjust the axis higher. We needed a red bar to start to confirm exhaustion on the momentum side. And now we are starting to get that on our oscillator. We got that a red bar today. So that, with the top hats that printed recently, is a sign that we might at least pause here, if not maybe sell off a bit more. So what does that mean then for Apple, right? Well, if it holds support, that's a good sign for Apple overall, maintaining the bullish sentiment, which bodes well for us, right? For our December monthly expiration long call. If we continue to sell off, then we really need to be mindful of how Apple trades, because Apple's a really big component of this market, right? So as much as I would like Apple to kind of do its own thing, and every now and then it will do its own thing, most of the time it follows along with the market. So if the market is going to experience a pullback, that means we might have to sit through a pullback on Apple. Now, part of the reason we gave ourselves so much time on this trade was to be able to sit through a potential pullback, right? That is why we went out to the December monthly expiration for that trade setup. So we have time to be able to sit through this. When we pull up the daily chart, we're getting a few pullback signals, but what's important to me here is, one, the Bollinger Bands, which are these blue lines for those of you who are new to trading. The price typically likes to trade inside the second deviation Bollinger Band, which is this inside blue line on my chart. And as you can see, the majority of the time, right, Apple is traded within that level. So they can be a clue on when they're anticipating maybe the price to move, when they're not anticipating the price to move, right? They'll either flare open or they'll consolidate. They'll kind of like pinch like a lobster claw. And that's what we're starting to see here on the daily chart, is we're getting this lobster claw pinch. Well, you know, that might not help us out on the call side, right? Because the Bollinger Bands aren't anticipating a strong move up as of right now, but they're also not anticipating a sell-off, which is good, right? It means that it's just going to anticipate some chop here. So overall, what I would like to see is, ideally, I want to see the price hold the 30 and the 100 period simple on the daily chart. That's around 146. So that means I need to be okay sitting through a pullback, probably down into that level. Ultimately, I want to see it hold the ATR trailing stop. That's around 144. If it starts to break that, then we're probably taking some sort of action on this trade to manage it. Otherwise, if it can hold that, ultimately, I still like this to the upside, because of course that weekly chart, right, like we discussed this weekend, this is still a very strong bullish chart. Even with the pullback this week on the weekly time frame, our momentum is actually still building up from last week. That's usually a pretty good sign for the bulls. That means there's still strength being put into this symbol, even with the price coming back. And it's bullish strength, right? Because it's a green bar above the zero line. So that's usually a good sign for the overall trend, which of course our overall trend is bullish. This is getting very narrow, right? Typically the Bollinger Bands, they can consolidate, right? But when they start to get very narrow like this, it means that it's building up pressure, almost like a pressure cooker, and it's going to, you know, pop, right? We're going to get it cooked and it's going to start moving. And you can see that when it's paired with the squeeze down here in particular. So which way would I be playing this? Well, I'd still be going with the trend at this time and playing it to the upside, especially because on the weekly chart, right, much like SPX, we're still at the very first level of support. So I got a question in the in one of the trading rooms at Simpler Trading, and somebody asked, well, do you think we should cost average, right? And I'll pull up the trade now, right? Let's just be very open about it. We're in at $1.70 right now. It's around $1, right? So we're down about 70 cents. For my rules personally, it's not the time for me to cost average. One, from a technical standpoint, I kind of want to show that it's holding support, right? I don't want to get in on the low of a red day, knowing that this thing could continue to break to the downside. So I need some confirmation that we're stalling here, right? That we're getting a bounce into the close, maybe making a bullish divergent bar. Those are the first clues on the technical standpoint that say, okay, maybe I want to jump back into this, add some capital to it, and kind of manage it that way. The second reason for me not to cost average this trade currently is because it doesn't meet the actual criteria that I have on cost averaging in regards to the cost basis. So our cost basis on this trade is $1.70. So let me just pull out my calculator because I feel like it might be a little bit easier to see from a visual standpoint. Right, I'm a visual learner, so hopefully this helps you guys. But it's $1.70. So if I'm looking to cost average, it means one, from the technical standpoint, I think that we're at a support level that I think there's going to be a bounce in the price to bring us back up to our strikes, to bring, you know, my trade back up overall. And so that's the first rule, but I also need it to make sense to cost average. And so if I'm cost averaging, that means that the mark on this trade is at or below 85 cents, meaning I've already lost basically half the value on this trade. And the reason why that is one of the rules I look for is because if I cost average too soon on a trade, it's not actually going to affect too much the cost basis, right? When I cost average, the idea is I am bringing down the price from 170 to something that I think the underlying price, right, of Apple, which is at 148 currently, can get back up to and help my trade get back to being profitable. So if I were to do it at $1.85, right, $1.85 plus $1.70, let's say we bought an extra contract, that means my total risk in the account is now up to $255. Well, that's still within our $500, so that would work. And then the net debit, right, the cost basis on the two contracts combined is brought down to $1.27. Well, that's much lower than the $1.70, right, currently. If we were to see a bounce up, now mind you, this is a 5-point strike increment, but if we were to see that 5-point bounce up, then certainly we would have a profit on our trade, right? And obviously we'd have a profit on our current trade too. But you guys get the idea. It's much easier to catch up to the 127 versus the 170. Let's say I were to cost average, earlier today when we were looking at cost averaging, it was at $1.20 when this question came up, the price on it. So if I cost averaged at $1.20, that means my capital's, you know, a lot higher. It's $2.90 now. And that means the average is around $1.45. Well, $1.45 versus $1.70, to me, that's not that much of a difference versus $1.20 versus $1.70, right? That's a little bit more dramatic. And so for my rules personally, I need it to be to where I'm really bringing down that net cost basis, because then that's obviously what makes sense for building in the capital. I'm greatly reducing the net cost to where ideally if the price does bounce, it means it's a lot easier for me to get back up to break even or profit versus, you know, piling in here currently. And it's not to say that you can't do that, right? But the way I look at doing that is if I'm trying to buy in here, that means I'm building into the trade. I'm not cost averaging, I'm building into it. And so what does that mean? Well, building into the trade means I probably didn't start with my full capital risk amount. So, I mean, obviously we're in a $500 account, right? So that's probably, 170 is probably the most risk I wanted to put on this trade. But let's say we're in a larger account and my normal risk tolerance per trade is $1,000. Well, if I start it with this trade at $1.70, then it makes much more sense to add on some more contracts here because I'm building into $1,000 of capital risk and I'm at, you know, $100, $200 of capital risk here, right? So I'm building into my normal risk tolerance. If I start at $1,000, then I'm not going to just keep piling in money because that is my normal risk tolerance for a new trade. So I need, if I'm adding more contracts, then it needs to be more on the management side of things, which means it needs to meet my rules for cost averaging. So kind of an education point for today. I hope that helps some of you guys out on, one, why I'm not necessarily adding more capital here, two, what we're overall looking for on the price in the next couple days, which, by the way, SPX, very nice, right? Look at it go right up to 46.51. So we'll see if it can maintain this going into the close. We have like a couple more minutes, but right at that 10 period simple moving average, right? So if it holds that, that's going to be a better sign for us and for the bulls tomorrow. So we'll see if we can get that bounce back up towards our strikes. But either way, guys, we have December, it's week 3. I keep thinking it's the monthly. It's the week 3 expiration, week 1, December 3rd. But more importantly, we have the month of November for this to trade, right? We have going into December. we still have some of those bullish signals on the daily chart that could help us see a bounce higher sooner than later. And certainly if we can hold around support here on the actual market, right, and the market gets a bounce, well, then that's a good sign that Apple might follow along too with the bounce, especially knowing that we already have this overall bullish sentiment on the chart. So, you know, hope that helps you out. If you're really feeling the burn and heat today, right, on a down day like this, then probably you have too much capital risk out there, right? That's part of the reason I like doing these sessions and these challenges, is to really teach you guys about capital risk. Notice how I'm not too concerned about this trade. Yes, I don't want to see a loss, right? Never want to see that. But I know I still have $330 of capital out there to be able to help offset this, to still be able to trade with new trade ideas. It's not eating up my entire account, right? And of course, if I had a larger account, this would be a much smaller capital risk than that. But you guys get the idea, is that we still have capital in play to be able to offset this, to be able to look at new trade ideas. We're not, you know, completely out of the water here because we bet it all on the Apple trade. So we'll see what happens the next few trading days. I don't see any questions. If you guys have any, let me know in the next couple minutes. We'll, you know, see how this goes into the close. Otherwise, I'll show you a few things that I was eyeing. I don't necessarily want to jump into them just yet, because I just wanted to see how the market holds today into tomorrow. But I'm happy to share those thoughts with you. AXP is one, actually. So I wish I jumped into this last week because it had a weekly setup, but I was, yeah, you know, it wasn't one I took. So, however, if you did take it, well done. If you didn't, and you're like me, still okay, because it looks like it has a bit of strength to the upside. What I do like about it is on the daily chart, we have this nice squeeze that's been building up. We have a bullish signal on the compound breakout tool, which is a nice trend signal. So that's still showing us bullish strength. We have momentum building up with room to move higher. The 10 and the 30 here are converged, but if we do continue the stair step, the 10 will roll up off the 30. That will go back into a bullish trend. So everything I like about this, minus the Bollinger Bands, which is why I'm not jumping into this today. The Bollinger Bands are pretty flat. So what I don't want to have happen is that we're actually just more in chop, and I'm getting in towards the high of that chop, right? So I kind of like to see the Bollinger Bands open up a bit more, or perhaps it's a thing where we play off more the weekly chart and we just give ourselves the extra time on the trade. The only issue I have personally with trading the weekly charts for the challenge is we're trying to grow the month within the account within a month, right? So, you know, weekly setups, they can take maybe a couple months to work out, which is why, you know, I'm kind of hesitant doing it in here, but always happy to share the trade ideas with you. So, of course, last week, like I mentioned, great setup here with the bullish divergent bar. I just, you know, didn't take the setup myself. If you did, though, it's looking good. Bollinger Bands are starting to open back up on the weekly chart. There's a weekly squeeze here. This is still technically a valid bullish signal. Momentum's building with room to move higher. So overall, long-term AXP looks like it could at least go back up and test the highs, if not continue the bullish sentiment. I don't know if we'll reach 200 by the end of the year necessarily, but that would be overall my next big target to the upside for it to go and test longer term. I see some questions coming in. Where can I see the challenge trades to this point? If you're a member of Simpler Trading, we do have a spreadsheet out there. Otherwise, it's more about just going on the recordings, unfortunately, and finding them. I'd be happy to, maybe this weekend, if I get a chance, let me write it down, go through the challenge trades up into this point. So, challenge trade overview. But yeah, so sorry, I don't have the spreadsheet living out there currently outside of Simpler Trading, unfortunately. Yeah, so the Bollinger Bands, if you have Thinkorswim, or most charting platforms, you can just go to Add Study, and it should pop up there. I always go to Edit Studies personally, and then you can go over to this type box, type in Bollinger, or start to type it out, and it will pop up here. And then what I've done is I've added Bollinger Bands twice to my study set. So the first time you add it, it will pop up like this one, which is the standard Bollinger Band. It's second deviation. Here, I'll show you the insides in case you're like, what does that even mean? So dev, that's the deviation. This is the second deviation. This is for the bottom line. This is for the top blue line. So here's the top one. There's the bottom one. And then 20 is the length. This is standard. This is how it typically plots, right? This is how most people track the Bollinger Bands. For myself, what I've also done though is I've added the third deviation. So it's still the same 20 length, but it's the third one. That's the outside blue line. And the reason why I have that is I track a few different signals on if the price really exceeds that level. There's a few clues you can take from that. And so that's why I track it. But if you're just looking for just the standard Bollinger Bands, right, for it to trade within that price level versus when it doesn't, or the clue on when it might be, you know, pinching or flaring open, the second deviation Bollinger Band is probably what you want to go with. So at Simpler Trading, for those of you who don't know, Simpler Trading is where I work for. It's a group of traders like myself who trade a bunch of different things. So, you know, we have options traders like myself. We have day traders. I also do intraday trading. So, you know, stocks, futures, all that kind of fun stuff. And it's where we go and we have live trading rooms and, you know, we post our trades. We talk all throughout the market day. And so there's a room specifically for my profit recycling strategy, which I do have some videos out there, I think, that live on YouTube. So feel free to check those out if you're wondering what that strategy is, or I'd be more than happy to talk about that either this weekend or next week, next time I'm on the mic in here. But that's where I do post a lot of my trades. So always, you know, feel free to check it out. But if you know, are first just testing out the waters, right, or, you know, kind of get an idea or feel, certainly, you know, feel free to keep checking in here on Twitch. But that is market close, guys. That's my time. Gotta go take care of the kids now. So thank you so much for joining me. We'll see how Apple trades. Like I said, I'm still looking for more trade ideas for the account. So if I see something I like, I'll let you know. The market ended up closing at 46.46. So that's right. Let's see how close that is to the 10. Okay, so it's still right by that 10 period simple, right? So it's kind of hanging on. Let's see how it goes into open tomorrow, right? Depending on if we can hold this level and maintain it into tomorrow, that's a good sign for the bulls. If we can't, then 4,600 is going to be that target for the downside, and we'll see whether or not that can hold. But thank you so much, guys, for joining me. I hope you have a great rest of your day. Futures traders, a great rest of your trading day. And for my Star Wars fans, may the trade be with you. I'll talk to you next time. Bye.